Hey guys, my name is Sam Shames, and I am the Director of Equities at Simpler Trading. And today I'm going to be showing you what's on my charts, my indicators, and all my settings, so you can set up your charts just like me. Guys, so this is what my chart settings will look like most of the time. This is basically home base for me in terms of my charts. I have a weekly, a daily, 195-minute chart, which is each day is 2 bars on this time frame. It splits it up evenly. And then I also have a 130-minute chart, which is 3 bars per day. So 3 equidistant bars per day. In terms of the moving averages that I will use the 8, which is the white line, 8 EMA, the 21 EMA, the 50 SMA, the 100 SMA, and lastly, and very importantly, the 200 SMA. Okay. So the moving averages are primarily used for determining trend. Once you've determined trend, they can act as moving support, dynamic support, but primarily they're used for determining trend versus chop. I use those same moving averages on all these time frames, so that stays consistent. I also, in terms of price, will use Fibonacci. So you'll see some Fibonacci. These are some symmetry from the December lows to the February highs to the March lows, gives you some symmetry. So I'm a big proponent of Fibonacci, and you're going to see that on my charts whenever I have a chance. The other thing that's up here in terms of the price access, I think is going to be the last thing in terms of price that I apply on the charts, is just the basic Bollingers. So you'll see the Bollingers here across all the different time frames. The reason I like the Bollingers, and you certainly can use something like an ATR or a Keltner channel, they are interchangeable and good replacements or alternatives to the traditional Bollinger Bands. But the reason that I prefer the Bollingers here is just because it gives me a statistical understanding of to where price should be. So for all of you guys that are stats nerds, whenever you have 2 standard deviations, which is essentially the default settings for the Bollinger Bands, then the probability or the statistics say that 2 standard deviations should contain 95% of the price action. And just from a probabilistic standpoint, when you start to break outside of those expected ranges, it is usually a good time to either take profits or to look to add. So I like bringing a statistical perspective to my trading in terms of extremes to the upside and to the downside, and I choose Bollinger Bands to accomplish that. Below price, we have just volume, pretty basic. The only thing that I've added to volume is I have a 5-period simple moving average that I apply to volume. It is relatively short, and I do extend it out upwards to 10 on these smaller time frames, but I do like to keep a relatively short moving average as low as a 5 on the volume, just because it starts to give me a little bit of indication as to whether moves that are happening are above average or below average volume. So that's really a really important thing for me, is understanding the presence of not just volume but relative volume. Is it higher than average or is it lower than average? And then if it's higher than average, like the last 2 days have been, that kind of volume tends to speak to us more clearly. Below volume, I have the Squeeze Pro. So this is the most up-to-date version of the Squeeze, and you'll see multiple different indications in terms of squeeze quality or squeeze level, if you will. So you have the red dots here, and that's just a traditional squeeze. That's kind of considered a medium squeeze at this point. There is one higher level that's considered a high compression squeeze, which we don't see any examples of here, but there is multiple levels to the squeeze. The red dots are just considered a medium squeeze, and then the gray dots here are considered actually a low compression squeeze. So you'll have 3 different types of squeezes: high compression, medium compression, low compression, and then the green dots just indicate that a stock is no longer in a squeeze. Really important indicator. It's one of the few true leading indicators in terms of volatility expansion, and it's not something that I would trade without. So the Squeeze Pro is always going to be on my charts. Below the Squeeze Pro is an indicator that I developed with Simpler Trading, and it's called a Trend Oscillator. So the Trend Oscillator, I won't get into all the specifics of how it works, but at least not in this video, but essentially the way that what it does is it tells me what moving average to buy in a trend. So here you have a clear uptrend in terms of price, and you can see the price is respecting the moving averages as it should on the way up during trend. The trend oscillator just gives me a little bit more indication as to whether I should be buying the 8 EMA or whether I should be buying the 21. And just as a heads up, this particular positioning here tells you that you should be buying the 21, not the 8. So a little bit of a heads up there going into next week. It also gives me a very good indication of when the market has truly gotten overbought. It's pretty rare, and you can see this move here denoted by the arrow on the second panel. It basically took you from about 300 up to about 360 or so. So a very sizable move. That's about a 20% move, almost straight up in the broader market, which is very substantial. And even this 20% rally, it didn't technically get overbought by this indicator until basically Wednesday of last week. So you can see the amount of pressure that it would take to get a reading where it's actually overbought. And I really like this kind of feature of this indicator because very few indicators do such a good job, I have found, in terms of really telling you when something's overbought or oversold. And this indicator kind of nailed it last week. The last thing that is on my charts here is going to be the range stochastic. So whenever you have indicators, pretty much no matter what indicator you use, each indicator strategy is going to have an Achilles heel. It's just the nature of the beast with trading. And so while the Trend Oscillator, as its name suggests, is quite good at giving different properties and giving different information behind a specific trend, as we all know, stocks don't just always move in trend, right? Stocks can move like this, and that would be more trend-like, shallow corrections, higher highs, higher lows, essentially, and that would be trend-like, and we use the trend stochastic, or the trend oscillator, I should say, for that. But what do you do in a situation where prices do more something like this? And that is quite common in the markets where you'll just trade sideways in a range. Well, in that instance, the trend oscillator still gives you some information, but if you can determine that you're trading sideways, and the fastest way to tell is just looking at your moving averages, when they all have direction, that is not sideways trade. When they all go sideways, that's when you have to use something else. So when we have a sideways market or non-directional trend, then I refer back more to the range stochastic. And basically, it's just two sides of the same coin. If you have a trending market, you use this one. If you have a non-trending market, you use that one. And the great thing about the way that these indicators were developed is, yes, they are strongest at their respective job, right? So, for example, if you had a nail, well, the strongest tool that you can use in combination with a nail is going to be a hammer. If you had a screw, you still could use a hammer, I suppose, but it would be less efficient than if you used a screwdriver. So it's just basically my hammer and my screwdriver, and it just depends on what problem the market presents me. And one thing that I really like about using these indicators together is just the way that they're developed and the way that they're coded. They do tend to give you similar perspectives, even though their priorities are different. So one last thing that I'll look for in terms of these two indicators working together is a concept called smiles and frowns. And what I mean by smiles and frowns is what is the general shape of the indicator telling you currently. And you can see here that if you kind of trace it in, you've hit a peak and you started to round out. And here you hit a trough, now you've hit an extended peak, and now you're starting to round out. So if you think about it like a wave cycle, waves kind of move like this, right? Kind of have like a sine wave. Well, if that is the case and markets tend to move like a wave, where exactly would we be in this wave structure right here looking at our indicators? Are we more at the lows or are we more near a high and cresting? Well, I would say that we're more about right here, right? We're coming, this would be more of a frown, right? A frown shape versus a smile shape. And so when you have both indicators giving you this indication that you're more in a frown type of structure, then that is more bearish and would be warranting more caution until you've cycled all the way through and you end up on the other side of the wave, where then you'd have more of a smile structure indicating a resumption of the initial trend. So again, this is my primary trading workspace. I do have 3 screens, so I have the same concepts across multiple screens with different time frames, but nothing else really changes. I always have the Bollingers, I always have the moving averages, I always use Fibonacci. I always have these lower indicators all coded the same way. And when you put the pieces together, guys, I think it really, well, it's a simple yet very strong and efficient way to look at the markets with not a lot of extras. We're just getting a perspective of what we need, which is price levels and momentum. And frankly, that's enough. So I hope you guys enjoyed taking a quick trip through my indicator sets. If you have any questions about the indicators themselves, how they work, feel free to ask me at any time during one of my sessions, or feel free to contact us directly at Simpler Trading, and we can give you more info that way. All right, guys, hope you enjoyed, and I'll see you for the next one.